Okay, hello. I am Rich Nilsson. This video is for Accounting 201 with Brother Kerr at Brigham Young University, Idaho. We're going to do an exercise 8-11. Had some technical issues with the first video, so I had to delete it. So my second attempt, I share my screen so you guys can see what I'm going to be doing here. Next time, let's see what I'm doing. All right. Now, I missed part of the problem, but I'm going to show you guys what I got wrong so you don't make the same mistake I did. Let's go to instructions. These transactions took place for Blossom Company. 2016, May 1st. Received a $4,300 12-month 9% note in exchange for an outstanding account receivable from R. Stoney. December 31st. Accrued interest revenue on the R. Stoney note. 2017, May 1st. Received principal plus interest on the R. Stoney note. No interest has been accrued since December 31st, 2016. Record the transactions in the general journal. The company does not make entries to accrue interest except at December 31st. Credit account titles are automatically indented when amount is entered. Do not indent manually. Record journal entries in the order presented in the problem. Okay, so right here in the parentheses says we're only accruing the interest one time. Show you guys how we do that. So, can't show you the steps because I went through everything on all three attempts, but so drop them in here, click this arrow, give you 3 dates to choose from, the 3 dates up here. So you want to first select May 1st, 2016. Account titles and explanation. The first account is going to be notes receivable. We're going to debit notes receivable for $4,300. Excuse me, $4,300. We debiting notes receivable. Next down, accounts receivable. We're going to credit accounts receivable for the same amount, $4,300. Down here, the second date is December 31st, 2016. This is where we accrue the interest, so I'll show you guys how to do that. First account is interest receivable. We're going to debit interest receivable for $258. I'll show you how to input that. Pull the calculator up here. So principal is $4,300. 9% interest, so we're going to multiply 4,300 by 0.09, which is 387. And then they took out the loan on May 1st. We accrued the interest on May 31st. That's 8 months. So we'll multiply 387 by 8. Gives us 3,086. Divide 8 by 12 was 12 months, so it gives us $258. I can explain, bro. So I'm show you. So we have 4,300 times 0.09 for 9%. Gives us $387. That's how much interest will be accrued for the entire year. But we're accruing this for 8 months, so multiply this by 8 divided by 12 is $258. So we're going to debit interest receivable for $258. The next one is interest revenue. We're going to credit interest revenue for $258. Going to here on May 1st, 2017. Going to let it says cash. We're going to debit cash. Show you the amount here. I'm going to do this. Pull the calculator back up. So we had principal of 4,300. There's 9% interest of 0.09. Yeah, I did something wrong. Sorry, guys. Bit of a hard time today. Sorry, guys. Okay, 4,300 times 0.09. Known as 387. So it's at 4,300 to 387. Okay. So we're going to debit cash for $4,687. Next one is notes receivable. We're going to credit notes receivable for $4,300. Yeah, I got this one wrong, but I'll show you guys what I did so you don't make the same mistake and get full credit. Next account is interest revenue. So I listed both, which obviously you can't do, but what you want to do is credit interest revenue for $387. Real quick, just a reminder, you have the principal 4,300 times 0.09 for 9% to $387. That's how much interest we're paying throughout the entire year. And last account is interest receivable. We're going to credit interest receivable for the amount that was accrued on December 31st, which is $258. So go through this last one again so you understand. You want to debit cash for $4,687. You want to credit notes receivable for $4,300. You want to credit interest revenue for $387. You want to credit interest receivable for $258. I'm going to go and stop sharing my screen now. Okay. So that is exercise 8-11. I know having an error might have been a little confusing. We're going to start the recording and post this to YouTube, and I'll send you guys the link. If you have any questions, go ahead and make a comment on the discussion board, or you can make a comment on this video, and I'll try and get that answered. Good luck.